This is a video reviewer for the Certified Public Accountant Licensure Examination. This is CPA Reviewer number 3, featuring questions on auditing. There are 10 questions featured in this reviewer. All questions are modeled on actual questions that appeared on previous CPA board exams. Before you proceed, please don't forget to subscribe to Review Central and click the bell icon to make sure you are notified of all new reviewers and other important updates. Let's begin. Question number 1.
Which of the following is considered the primary objective of an audit of financial statements? A. To provide assurance that financial statements are free from material misstatements. B. To prepare the financial statements for the client. C. To ensure all transactions are recorded. D. To detect all errors and fraud.
The correct answer is A. To provide assurance that financial statements are free from material misstatements. The primary objective of an audit of financial statements is to provide reasonable assurance that the financial statements are free from material misstatements, whether due to fraud or error. The auditor's role is not to detect all errors and fraud, as that would be impractical, but to assess whether the financial statements are fairly presented in accordance with the applicable financial reporting framework. This reasonable assurance helps stakeholders trust the accuracy and reliability of the financial information. Question number 2.
The concept of reasonable assurance implies that A. The auditor guarantees the accuracy of the financial statements. B. The auditor has performed an audit in accordance with auditing standards. C. The audit has been performed free of any errors. D. The auditor should identify all misstatements regardless of their nature.
The correct answer is B. The concept of reasonable assurance implies that the auditor has performed an audit in accordance with auditing standards. Reasonable assurance means that the auditor, through following established auditing standards, has performed sufficient and appropriate audit procedures to conclude that the financial statements are free from material misstatements. It does not imply a guarantee or perfection, but rather that the auditor has exercised due diligence and complied with professional standards to provide confidence in the reliability of the financial information. Question number 3.
Which of the following factors is least likely to affect an auditor's judgment of materiality? A. Nature of the entity's business. B. Auditor's fee arrangement. C. Amount of net income. D. Volume of transactions.
The correct answer is B. The auditor's fee arrangement is least likely to affect an auditor's judgment of materiality. An auditor's judgment of materiality is based on factors like the nature of the entity's business, financial performance, and volume of transactions, as these influence what could be significant to users of the financial statements. However, the auditor's fee arrangement is unrelated to the assessment of materiality. Materiality judgments focus on the impact of errors or omissions on the financial statements, not on the financial interests or agreements of the auditor. Question number 4.
In planning an audit engagement, the auditor should primarily focus on A. Performing substantive tests on all transactions. B. Establishing an understanding with the client on audit fees. C. Identifying areas where the risk of material misstatement is greatest. D. Verifying the mathematical accuracy of the client's accounting records.
The correct answer is C. In planning an audit engagement, the auditor should primarily focus on identifying areas where the risk of material misstatement is greatest. This risk-based approach allows the auditor to allocate resources effectively and design appropriate audit procedures to address these high-risk areas. The goal is to concentrate efforts where errors or fraud are most likely to occur, thereby improving the efficiency and effectiveness of the audit. Question number 5.
When obtaining an understanding of an entity's internal control, an auditor should concentrate on the substance of controls rather than their form because A. The controls may not be effectively implemented. B. The cost of controls may exceed their benefits. C. Internal control procedures may be poorly designed. D. Management might have intentionally ignored internal control procedures.
The correct answer is A. An auditor should focus on the substance of internal controls rather than their form, because a control that exists on paper or in policy might not be effectively implemented in practice. Even well-designed controls may not operate as intended due to factors such as employee negligence, management override, or lack of proper enforcement. Therefore, the auditor evaluates whether the controls are not just present but actually functioning as designed to prevent or detect material misstatements. Question number 6.
Which of the following audit procedures is most appropriate for testing the existence of inventory? A. Reviewing the client's inventory costing methods. B. Inspecting the client's physical inventory count. C. Confirming inventory with third-party suppliers. D. Examining purchase invoices.
The correct answer is B. Inspecting the client's physical inventory count is the most appropriate procedure for testing the existence of inventory because it involves directly observing and verifying that the inventory items are physically present at the client's location. This provides reliable evidence to confirm that the recorded inventory actually exists, as opposed to just being documented in the accounting records. Other procedures, like reviewing costing methods or examining invoices, do not directly establish the physical existence of inventory items. Question number 7.
The auditor's responsibility to express an opinion on the financial statements is: A. Conditioned upon the client's acceptance of the audit fee. B. Absolute and unconditional. C. Limited to the expression of an opinion on material misstatements. D. Only applicable when performing a review engagement.
The correct answer is C. The auditor's responsibility is limited to expressing an opinion on material misstatements in the financial statements. This means that the auditor's objective is to provide reasonable assurance that the financial statements are free from material errors or fraud. The auditor does not guarantee the absolute accuracy of the statements, nor is the responsibility dependent on fees or limited to specific engagements like reviews. The focus is on identifying and reporting significant misstatements that could affect users' decisions. Question number 8.
Which of the following types of audit evidence is considered the most reliable? A. Documentary evidence obtained from within the client. B. Oral evidence provided by the client's internal audit team. C. Direct evidence obtained through physical inspection. D. Client-prepared reconciliations.
The correct answer is C. Direct evidence obtained through physical inspection is the most reliable form of audit evidence because it allows the auditor to personally verify the existence and condition of an asset or inventory. This evidence is generated directly by the auditor and does not rely on the client's representations, reducing the risk of bias or error. Other forms of evidence, like client-prepared documents or oral statements, are more susceptible to inaccuracies or manipulation. Question number 9.
If an auditor discovers that an internal control is ineffective, the auditor should: A. Modify the opinion on the financial statements. B. Perform additional substantive testing. C. Issue a qualified opinion. D. Terminate the engagement.
The correct answer is B. If an auditor discovers that an internal control is ineffective, the auditor should perform additional substantive testing to gather sufficient evidence regarding the accuracy and reliability of the financial statements. This is necessary because ineffective internal controls increase the risk of material misstatements, so the auditor must adapt their audit approach to ensure they adequately address those risks. Simply modifying the opinion or terminating the engagement would not provide a solution to assess the impact of the ineffective controls on the financial statements. Question number 10.
When an auditor concludes that there is substantial doubt about the entity's ability to continue as a going concern, the auditor should A. Withdraw from the engagement. B. Issue an unqualified opinion without reference to the doubt. C. Disclose the doubt in the auditor's report. D. Require the client to disclose this information in the notes to the financial statements.
The correct answer is C. When an auditor concludes that there is substantial doubt about an entity's ability to continue as a going concern, the auditor should disclose the doubt in the auditor's report. This disclosure is essential because it informs users of the financial statements about potential risks that could impact the entity's future viability. Not addressing this doubt could mislead users regarding the financial health of the entity. The auditor must ensure that this information is communicated clearly, either in the audit opinion or through an emphasis of matter paragraph, depending on the circumstances. You have just watched the CPA Board Exam Reviewer No. 2, featuring questions on financial accounting and reporting. Check out more related review videos and playlists on our channel. If you find this useful, please like and share. Leave a comment to share your thoughts or questions regarding this reviewer or any particular part of it. If you haven't done so yet, please subscribe to Review Central and click the bell button to get notified of all future reviewers and updates. Like and follow us on your favorite social media platforms. Good luck to your forthcoming CPA board exam, and we look forward to your long and fulfilling career in accounting and finance.